All right, everyone, welcome back to the Tsunami is Coming podcast, the What is Keeping Money Up at Night issue. I am very happy to welcome today my good friend, Layel Naban from Societe Generale, where she's the head of sustainability for financial institutions group and global banking and advisory. Layal, so nice to have you with us today.
Thank you, Zarani.
Thank you
Very
for
happy to
joining.
be here on this sunny afternoon.
Exactly. Sunny Paris for those of you tuning in from
It's a pleasure.
other
It's a pleasure.
places.
Thank you for having me.
Layal, we've had many conversations over the years, so I do, and especially in preparation for this, so I do suspect where this is going. But let me ask you my opening question, as always, Layal, what keeps you up at night?
That is really important for me, and where I think I want to put all my energy and expertise in it. So it's a big, big, big question. Everybody talks about millions, billions, and I'm thinking about the trillions. So what keeps me awake is where are all those trillions going? Are they going where they are mostly needed? Are we investing all this capital that is available and we will develop where is the capital, where is the money, where it's best for the economies, for our welfare, for our biosphere. So where is this money invested? So that keeps me up at night. So capital is abundant. The idea is to channel it where it should go. So
All right, so can you take us through?
that's what I say. So today, um,
Absolutely. Can you take us through that channeling challenge? Where do you think it is going? Where should it be going to address this stake that is still huge of sustainability?
yeah, of course. So maybe I'll start with two figures on where should this money go. We all talk about the SDGs. Now it's, nobody is talking about the SDGs anymore. But if we look at today, we are 2026, and if we want to finance all the SDGs, we're thinking about, let's say, 5 to 6.5 trillion a year that need to be invested between now and 2030, 2035. So another figure is the net zero. So when we talk about reaching net zero, how much does it cost? It costs between 4 and 6 trillion every year as well. That's an additional 4 to 6 trillion to reach the net zero. So, and we're not far when it comes to net zero. So I'll tell you where the money is coming from, but these are, let's say, two figures where clearly money should be channeled. Today, we're very happy that the momentum around renewable energy, low carbon energy is there. 2025 was a record high of investments in electrification, and low carbon energy has the lion's share. So 2.3 trillion have been invested in that. That's according to the International Energy Agency and to Bloomberg. Compared to that, to have an idea, only 1 trillion has been invested in the fossil fuels. And we hear a lot in the news about, especially what's the tensions in the Middle East today. 1 trillion has been invested in 2025 in the oil and gas. So the 2.3 trillion invested in low carbon energy, we didn't start there. This is a maximum, but let's say if we go back 10 or 15 years from now, it was a couple of 100 millions. A few years ago, we were at the bar of 1 trillion, 1.2 trillion. So now we're at the 2.3 trillion, and we're getting to the 3 trillion in 2030. So that's a good news. That's a really good news, and that's a big momentum. Now, the bottleneck around those investments is that they go to unrisky projects, very robust developers, very advanced utilities. So basically, in OECD countries and developed countries, in backed projects. So we still find next to that, we still find around, let's say, 1 billion of the population who still doesn't have even access to electricity. So there's the mismatch between all these investments. They go to, development, refurbishment, etc. But still there are, some people lagging behind, and 1 billion don't have access to electricity. So those are a bit the figures of, we can go much more in details than that. But I should, what keeps me up at night most is where is the money and where is it flowing today? So if I give you just if we take the financial industry, and those are my clients, those are the people that I talk to every day, and I try to convince to invest in more, let's say, low carbon energy. They all have the net zero commitments, etc., and we can develop around that. But just to simplify, at the top of the financial value chain, we have what we call the asset owners. Asset owners are, those who have this capital, and the rest of the financial industry, the banks, the asset managers, the hedge funds, the brokers, the venture capital, the private funds, they all serve these guys. And these guys, we're talking about the pensions, our pensions, Jeremy, you, me, and our parents. So only if we take pension funds worldwide, we're talking about 60 trillion to be invested. You add to that the sovereign funds, the sovereign funds in the GCC, in Asia. So those are, they come around 15 trillion. And a third big bucket of capital is insurers. They have around 23 trillion. So this is the money that needs to be invested. So where do these guys invest? Most of the, let's say around, I'm taking really rough figures here, 80% of their investments go to the equity and bond market. And most of the equity go to the US market. So this is where there is a tremendous opportunity for Europe, especially now, to have, a Europe. I mean, there are a lot of hurdles at the European level, but today the lion's share of these investments go to equities in the US and the bond market, of course, plus the sovereign bond markets, etc. What's really interesting is the 20%. The 20%, this is the real economy. This is the real projects, the renewable energy farm, the solar farm, the textile recycling plant, all these new innovations in venture capital and private equity. So this 20%, this is where I'm focusing on, and this should go to innovation, to low carbon, to new business models, to circular models, etc. And today, of course, these guys, they have a fiduciary duty towards their investees, towards our own pensions. We don't want to lose our pensions, Jeremy, by investing in, risky, let's say, investments. And we don't want to lose, lose the returns of the market. So they need to balance between very profitable, let's say, oil and gas industry, etc., and from the other side, more steady long-term value creation projects with low carbon, let's say, investments. So these guys, they, if we take the insurers, they put every year, they invest or they rotate their investments for around 4 to 6 trillion. So you see, the capital is here, the scale is here. The whole idea is to channel it where, there are interesting investments and where we can make the most of the impact. So today we're still very far, but
That's really interesting, Layal. Now let me ask you a naive question. I'm listening to you and I can't help but wonder, as we try to tackle that challenge that you eloquently described of channeling the money, what's the difference going to be ultimately between bankers and venture capitalists? It seems like it's the same challenge ultimately of trying to get the money where it needs to be and sometimes making strategic bets.
Yeah, the difference is simply scale, maturity, and size. When we talk about venture capitalists, we're talking about small ventures, very early stage innovation, I think if you accumulate all the, let's say, investments in venture capital, I don't want to give rough numbers, but we're below the 1 trillion worldwide. So it's very small scale and very early stage, new business models, very
Mm-hmm.
innovative. Sometimes the products are not mature.
Mm,
On a banking side, we're here to finance the big projects.
mm,
The 5 gigawatt wind farm in the west coast of the UK that costs 5, 6, let's say, billions to be financed. And we bring the debt. And us as banks, we will never finance, Jeremy, a new business model or a proof of concept or a very
mm-hmm.
risky technology that hasn't proven, its worth and its value. But when I talk about the big investors, let's take, those are the big names, the Canadian pension funds who are very, very known in investing in renewable energy, in large scale utilities, in large companies. The smallest size, Jeremy, we're talking about 300, 400 million to be invested.
Mm-hmm.
So this is where the role of banks come. So each one has, the role of startups, and the VC ecosystem is super important because they are inventing the world of tomorrow. They are inventing the winners of tomorrow, the businesses of tomorrow. Thinking about large, as I mentioned, wind farms or let's say hydrogen electrolyzers or gigafactories. Although there were a lot of problems in some of the financing. We all know the big example of North, tens of billions went down the drain in this financing. So banks don't get it right all the time, but when you need large investments, this is where the banking role is super important because they are the experts in raising the debt and they are the experts in connecting those big projects with the investors that bring the financing.
Mm. You said another word that is fundamental, it seems, in this context. I think it's obvious to many people. It shouldn't be this obvious, but it's the word adaptation. I still remember a time where there was an arm wrestling match between mitigation and adaptation. What would we do to basically reduce the effects of climate change? Am I wrong to believe that we've lost this battle for mitigation and that now clearly we're in the mindset of risk mitigation and risk management now?
Yeah, I refuse to say we lost the battle. I
Mm-hmm.
would say, I mean, we lost the battle, but we didn't lose the war yet, for
Mm-hmm.
me. So I didn't give up fully on mitigation because, as I mentioned, the investments are still there, and we might reach, let's say, a peak of 1.8 degrees, 2 degrees. But if we continue investing in those solutions, the 1.8 or 1.5 could go down, especially with now carbon sinks that could be invested. So that's one stream. And unfortunately, yes, adaptation is now in every meeting room, and it's being discussed at board level, at financiers level. So we estimate that we will need around 230 to 300 billion every year of investments in adaptation. And unfortunately, this is capex that is sunk cost. So let me be very specific. If you finance, let's say, a flood protection, this flood, let's say, protection will not bring you any cash flows. So it is an investment. It is super important to protect your asset, to protect let's say, the oil and gas platform, or to protect your power plant. It's super important, and this is keeping up at night all the investors, because the last thing they want is to find themselves with devalued assets or unprotected assets. We're losing every year around 230 billion of losses related to climate change. That's wildfires, rising water levels, etc. So today, again, this is a big challenge to see how investing in adaptation will not only protect the value of the assets, but it will prepare for the world of tomorrow, a more resilient infrastructure, more resilient businesses, more competitive businesses. So it is really an opportunity. It is really a risk management exercise, but there are some opportunities around that. So one super important asset or let's say resource related to adaptation is everything related to water. So today, water, we take it as a given, but most of the investors are looking at water as the rare resource of tomorrow. Just to give you a size, an idea of the importance. Today in the Gulf region, there is 1% of the population worldwide, but they consume 50% of all desalinated water in the world. And this represents, let's say, billions and billions of investments. So water in desalination, in flood protection, in efficiency and management of water scarcity, in management of water pollution and water, let's say, infrastructure. These are super important investments, and they are part of the famous adaptation world. And most of the investors, asset owners, asset managers, they're looking at ways in investing in resilient water supply solutions. That's a big important topic mobilizing us now. So I think just one figure, in between now and 2035, we will need around 50 billion of investments in water.
Well, Layal, I think we've generated.
So that's the.
I'm sorry, that's the.
So no, that's the story. I wanted to say that the capital is there. The idea is to make sure to find robust and bankable projects where you can channel that capital towards it, and that's the big challenge.
I think you've eloquently exposed it for us today, giving us some key ideas on where to look and how to basically carry this out and the obstacles that we might find along the way as we do. Layal, thank you so much. I think this is just the beginning of a conversation. I hope you come back.
With pleasure. I mean, with pleasure. We'd love to, let's see where the billions are going next year.
Exactly. That's the question to monitor. Layal, thank you so much. And thank you everyone for listening. Always remember
Thank you
you can
very
hit
much.
reply with your comments.